Okay, this is my another yet attempt to record this because something happened with my mic and I can only record when I change the settings by the looks of it. Anyway, let's focus on this. Just as a reminder, I open new page, I say trading view. If you haven't signed up, please do so. You see S here, it's me. When you open up the toolbar, you see products, you click on super charts and you end up on that place your work. Let me go back to the one I was working on so I can close this. 1 minute. And focus on what I have already. So on the left hand side you see 4 things we pay attention to in our particular strategy. And ideally I would like to top it up with other people's strategy just to have more tools you have in your hands, the better. What are we looking at? We look at the direction of the market and the trend, whether it's going upwards or going downwards. That's important. Then we try to identify the levels of support and resistance, and this is where you chart. We also look at the energy of the instrument, i.e. volumes, how many people or what capacity people are buying and selling, and etc. And you can see the volume at the bottom always if you zoom in. Right? And I'm sure there are other tools to show it, but it's not on my screen because it's a free version of TradingView. It would be interesting to actually bring the RSI on top, the momentum of growth and down. It's also important. Some traders use it for stock, but I think it's applicable to the cryptocurrency as well. So when I say instrument, we talk about anything we're charting on. In this case, this is Bitcoin. This is our instrument, right? So what happened? A few months ago or a few weeks ago, I think I put this level. The easiest or the first one to start, where do you chart? You look at the trend and the breakage of that trend. So if you can see on the left hand side, the instrument was going upwards and then it broke. The trend has broken and it started going down. Then it went up again and again, broke and started, bouncing off down. So when the trend changes, be it upward or downward, this is usually where the charting starts. That's the first and the easiest. And make sure this is happening while you're watching on a daily chart, nothing less than that. So this was the level I charted for whatever reason at the time, and I thought the level is confirmed by the many times the instrument touches it and bounces off, or touches and breaks up or breaks down. Right, you can see this was the level I identified at the zone where the trend has broken. But then the level was touched again, you can see here. Then it was touched again here, here, and here. And it just continued throughout. This was one of the levels we identified. Then we looked yesterday, we were looking at this level in particular. Let me open up slightly. It's not very accurate because my tools are not. I actually want to move it a little bit. I can't move it down, right? So I need to move it a little bit down here on this red one. Let's see it. A bit higher maybe on the whisk. But anyway, this is about 111,900 or so. If you're very accurate with it, which by the looks of it I am not. But this was 111,980 if you're very, very accurate. Why is this important? For a few reasons. First of all, the trend upwards was broken. Yeah. If you continue scrolling, you will see it's not very accurate the way I put it. It needs to be slightly different, slightly upwards. You can see that this level around it, something is happening in this region, but also touched here again, touched and tried to break last night while we were watching, and today it's touching. If you notice, this is a whisk, this is the body of the bar. It touched and I think it's bounced off again. So when that happens, you know that there is a high volume of orders sitting at this particular level. There's some sort of a market maker sitting there. So that's the first one. What else? I recorded earlier when I couldn't save it. So once we looked at those large levels at the where the trends has broken on a daily chart, we can then change to an hourly chart. Go down. This is my hourly, right? You can see last night. Let's delete this. It came to this level we identified, tried to break it, and bounced it off. This was last night while we were watching on an hourly, right? And today, or throughout the night, it starts to approach that level, trying to break it again. An hour ago, it attempted, and you can see it started bouncing off, and now it's approaching the same level again. So what are we looking at in this particular case? We really want to see whether the level we identified is being approached by the instrument on a slow and steady bars. We don't want to see this massive paranormal or abnormal bar charts. They're good because someone just poured money into it, but we really want to see whether this small bars are approaching the level and trying to break. You can see that it tried last night, it couldn't, it bounced off. Tried this morning, again bounced off, and I think it's attempting to try again. If I zoom in, this is an hourly. So the more times it touches this level and tries to break through, there's a high chance it will bounce off upwards. I can go down to maybe 15 minutes afterwards just to have a look what's happening. You can see that it touched, bounced, touched, bounced, and it's trying to touch again and bouncing again. So I think that will continue. Just sit and watch. Once it passes this 111,900, this is not very accurate, 900, there's a high chance it's going to go upwards until the next level of resistance encounters on the road, which is 100, whatever. Could be this one actually, 114, and it's actually very, very coinciding with what I shared a few days ago, that there are levels or orders to buy at 109 and sell at 114 or something. So this is where the next resistance may be, but that's a bit of a global. Come on, why is it giving me horizontal ray? There we go. Can I move it? That could be another one coming. What else did I want to say here? Okay. If I look at this again, let me sort out my screen. What we're looking at this, other than instrument touching the level of resistance or support multiple times, this is what we call the level is very strong and there's a market maker sitting there with large volumes. We also look at one of the other techniques is to look whether the level was level of resistance, then it became level of support, then it became level of resistance. So there is a mirror image. This particular level 111 plus, right here is level of resistance. So the instrument was moving below it. Then it became level of support. The instrument mirrored itself. It became on top. And now it's trying to mirror it again. Also important to see that every time it broke this level, it went and identified its highs. The following attempt to go up identified even higher highs, and then the next one higher highs. So there is a chance once they break these levels, there will be higher highs. So expect something above 125 and 126. We also look at this particular, if you notice, there is this particular level here, I'm showing 98 pointing, but that's probably not accurate. If we historically look back, there must be something stronger. So what we were identified or was talking about yesterday was really something below 96. Right? In this particular large region, the instrument currently is trending. It's going chopping up and down, slowly collecting its volume and, i.e., its energy to go upwards or downwards. If it doesn't break the resistance level here at 111, start bouncing off down, then it may go all the way down to 106. Then we'll wait whether it's going to bounce off up again or it's going to break down. Right? If it can't keep its level at 106, the chances are it will go down to 95, 96. So this particular region I'm highlighting, trying to highlight where the market is ranging at the moment. It's a bit of a 50-50. If it gets out, if it breaks 111, 112, then the chances next is 120 and then 125, etc. If it doesn't break and starts hitting the resistance because there isn't enough buyers as opposed to sellers, then the market will go down. And then there's always a chance of it going really below 95. What else I was going to say? That's it for now, I think. This is one of the first charting you do, looking at the trend and when the trend breaks. And then you look at each daily bar and look into average true range within a day, ATR. So we base our technique on ATR. I also watched, and there are people in the group who chart on top of what we're doing, chart Fibonacci's. That's the next thing I would like to learn. Look at other fundamentals, putting MACDs, RSIs on top. So the more tools you use, and each tool confirms your level, the better prediction you have. I hope it gives you some information.